Good morning, everyone, and welcome to the European crossover webinar. And let's go and move this out of the way. And let's go and bring in some data coming in. Okay, at 5 a.m. Eastern time, we do have Eurozone producer prices. We also have coming into the States is actually going to be, or at least that's when the time will be, is we got New Zealand dairy and milk auction. Actually going to be a relatively quiet session. Let's see, and at 9:30 Eastern, we do have Canadian manufacturing PMI and ISM New York Index at 9 a.m. And I'll be at 9:45 a.m. here. Let's go in and move this out of the way then. And we're still seeing the euro under pressure, trying to hold this area here. And if you look on the 2-hour chart, this 1285. Now, what's really huge on the euro is going to be this 1262 on a daily close area. Very, very important. Obviously, the euro took a pretty good little setback yesterday as we lost at 1326, which in large part was due to the move that we saw in the bunds. Be just for a moment. And we're still holding pretty much close to those highs in the bunds. Let's go on and quickly move into that. As you can see, quite the move here. That has certainly weighed and created that pressure. Yes, the dollar was firmer to go and start out the week, but it's really this move in the bunds that really kicked the euro in the teeth. Now we're also starting to see the gold market come back in here, but this really kicked the teeth in on the euro right here. Let's go and move back into the main screen. So this one has more to do with what's happened with the bunds, and boy, in the history, looking back over time, generally the euro is going to have a tough time trying to move higher, if not move lower, when you've got bund rates moving lower, and certainly we saw that impact. The dollar index was already making a pretty good headway, and let's go on and move into the cash dollar index. And we've made it all the way back here. As I mentioned, I usually go with the touches. I don't go with the tips, but you can see here the last one right here where the body touched in here. So that's why I adjusted it right there. Well, we're just right there pushing against the bottom portion of this trend line. The market's had a pretty decent pullback here. We'll see what happens. But as I mentioned, I was looking for the dollar to move higher, but higher ahead of the G20. Well, we didn't move very much at all until once we got past the G20. The market started out the week a little bit firmer, but it was actually, as I said, as the bunds continued to weaken or started weakening, that the euro really came under pressure yesterday. And boy, look at this cable. It has just rolled over again. Unbelievable how this pressure continues to go on and sustain here with the cable. Dollar CAD is also weakened. I jumped out a little bit early out of mine. Like I said, I really a trade I shouldn't have been in or should have gotten out well before. So as we move back up, but we did go on in the strength. The dollar CAD had actually been, as I said, the weaker sister. Matter of fact, when the dollar was gaining, I thought we should have blown through this 31. Now, eventually, as the dollar continued to move higher on the back of the Bunds falling, Bund rates falling, finally we pushed up in here, made up to what, 31.40s. But the market should have pushed much higher then. But that's the case there. And the peso doing a whole bunch of nothing. Dollar yen has pared back a bit from that 1850s. Remember when we came in to start the week on the basic technical analysis going into Asia to start the week, we were looking for 858. The market topped out, 854. As we came in ahead of that, and we've seen a pretty nice little ease back here in the Australian dollar, which we were looking for that. We'd already had quite the run already here in the Aussie dollar. We finally came back and weakened. I think our level that we're looking for was 69.60, if I remember correctly, and that was actually our analysis. Let me see. We said a pause is likely in order with support coming in at 69.60, and the low was 69.56, so not bad. And we've since rebounded a bit from that level. Also having to correspond closely to the 38%. Let's go and move this. And we'll go and take a look quickly on the cross rates page. Aussie yen has finally eased back a bit. We're just kind of hanging around this area here, which we had as our support area here, but we've already eased back just a bit. And with the weakness in the euro, unsurprisingly, we've seen the euro Aussie pull back in a bit too here. As I mentioned, gold has come a little bit off those lows, so we're trying to hold our own here. Obviously, like I said, the euro continues to remain under pressure with those lows and bunds, and we've seen the QE also ease back a bit here from the from run at that 38% and that 72.83. Really appears to be just a little bit of evening up from what we saw on Monday. And we're going to move back into the main screen and take a look at the news for today to get a little bit of a flavor of what's transpiring. A jobs deadlock shines light on EU troubles. The European Union leaders try again in Brussels today to break the deadlock over the EU's top jobs, a process which so far has revealed largely awkward things about the state of the Union. The fragmentation of the European Parliament after the May elections underlines just how fragile the bloc's pro-European centrist forces are, with Emmanuel Macron so far unable to convincingly assume the mantle of first among equals from a weakened Angela Merkel. Moreover, the cacophony of the first 2 days has prompted many to conclude that the club cannot take on any further members, to the likely detriment of the EU hopefuls like Macedonia, Albania, and Western Balkan states, which may be tempted to look east to Moscow for the future. But that is further down the line. Today, the main questions are simply who will run the European Commission and the ECB. One knock-on effect of the stalemate is that the European Commission has had to call off a meeting at which it was due to decide on whether to recommend disciplinary action against Italy over its public finances. Even with the threat of imminent action lifted, Rome late on Monday announced that it was cutting its 2019 budget deficit target, saying the revised data meant that the country fully complied with the EU rules. The Italian debt problem is clearly not going away, and it's just that the EU's just got a bigger fish to fry right now. The two rivals in the UK premiership race are meanwhile launching hot air balloons about their plans to deliver Brexit if picked up to run the country. Ian Duncan Smith, the chairman of Boris Johnson's campaign, has said Johnson would make an offer to the EU on post-Brexit free trade deal to see if Brussels is prepared to talk. Jeremy Hunt insists that the Merkel told him she would be prepared to look at proposals for a revised Brexit deal. Neither approach is, of course, guaranteed to work, and many Conservative Party voters don't really care anyway, but both want to at least be seen to try and avoid a no-deal exit. Today, there were hustlings to the Northern Ireland. As far as the market, the post-G20 world market's relief has quickly returned to the hesitations as Washington continues to rattle sabers on trade and investors take the stock of another alarming swoon in global manufacturing last month. Although the S&P 500 reached record highs with gains of more than 7/10 on Monday, futures have stalled the first day, and Asian markets turned more mixed. After agreeing the G20 summit at the weekend to resume trade talks, President Trump insisted on Monday that any trade between the U.S. and China would be tilted in the U.S. favor. Meanwhile, fears grew that Washington's protectionist global policies will widen after the Office of the U.S. Trade Representative proposed $4 billion of potential tariffs on European goods amid the ongoing dispute of the European Union. Aircraft subsidies while there's some debate whether the global economic slowdown is a direct result of the trade tensions or merely aggravated by them. The damage to global manufacturing was clear for the June factory surveys released on Monday. JP Morgan's gauge of global manufacturing fell to its weakest in almost 7 years, showing a contradiction for the second month in a row. I meant to say contraction. Having risen above 2% on Monday, the U.S. Treasury yield slipped back to that level overnight. Inversion of the yield curve between the 3-month and the 10-year deepened again toward the 20 basis points. The dollar slipped back after the dollar index staged its biggest one-day rally in 3 months on Monday amid reduced expectations the Federal Reserve will go for a rate cut of 50 basis points. Euro dollar steadied after falling back below 113 overnight, and dollar yen held above 108. Australian dollar gained after the RBA rate cut and signs the government is about to secure enough votes to pass for a plan for sweeping tax cuts over the next decade. Shanghai stocks into low after Monday's rally. And let's go and move on. Australian dollar defies broader risk rally as RBA cut looms. The dollar index against a basket of 6 major currencies remained near its highest in a week as sentiment picked up on the falling of an agreement between the U.S. and China to resume talks. That left the euro marred at the lowest level in more than a week as disappointing economic data triggered a tumble in bond yields and boosted expectations for a central bank rate cut in the common currency bloc. RBA governor, says the RBA, which is tipped to lower interest rates by 25 basis points to a record low of 1% in a meeting later on Tuesday. RBA Governor Lowe will also speak to business leaders in Darwin after the meeting, which could provide clues on how much further the interest rates could fall. Lowe is speaking in Darwin and is really within where the market will be looking for clues. But our view is we will get one more follow-up cut, said Ray Trill. The other story is the revival in the U.S. dollar fortunes, which has surprised me a little bit, but now have the juxtaposition of Treasury yields backing up on the new record low European lows. And finally, Eurozone markets now price in a 50% chance of a July ECB cut. Money markets now price in roughly a 50% chance of a 10 basis point cut in Eurozone rates this month. Aeonian money market futures dated to the ECB July 25 fifth meeting price in around 5 basis points worth of an interest rate cuts, up from around 4 basis points last week. So with that, we're going to move into the analysis and see what we stand. Well, what was support yesterday and which actually held initially, and we saw a nice bounce, which was at 1326 when we came into the webinar. Um, saw the market rally up to 1360 and then turn and fall back. So now resistance is going to be looking here at 1326. We can look, and obviously 1262 is just nothing short of huge. That is just huge. You don't want to lose that on a daily close. So let's go on and let's go and take a look on a 2-hour chart. But you can see how important this 1262 is. Very, very important. Let's go and move into the 2-hour. Well, we talked about that 1326, and you can see coming right in here. 1326. So it just as a daily, we were talking about the key level that it's going to be 1326 on the upside for the euro. So we finally, when you look over here on the 2-hour, which generally I go by the 30-minute, and we'll take a look here with the 30-minute. We'd broken here, and really the test back up here, the 1360, we weren't able to cross back. Now, like I said, we'd ease back and look like the market would try and make a stab and hold in this area. But like I said, the pull from the weakening of the bunds really was too much, and really what happened is we really pressed these stops. Now, to get a little bit of better clue on the euro, and things have been looking pretty good overall, although we had 3 straight of these medium-legged dojis, and we talked about this, I think, on the wrap-up. And generally, what you'll see is when you see this, the market will take a pause, and will pair back from what the prevailing direction is. Now, we saw a huge move here, and we came back, but losing this 1326 was not good, and I know that a lot of big houses were long the euro, and I can't remember if it was, I don't know, I don't think it was Morgan Stanley, but I don't remember who it was. They were looking for 1347 to actually hold very well. Obviously, we broke low, and the bunds have really put the pressure back here with the euro. I'm going to go in now. When you look at the way the euro fell, you're probably thinking, wait a minute, this is now bearish in a sense, but look where we've come from. So it won't be bearish unless we get back below 1326. Yes, on a very short-term basis, this is not only bearish, it's hella bearish. But when you look at this in context, we're still above here. We're still holding this 1285. We're going to have to move lower to flip it to bearish. So I'll flip it to a range for right now, because if you look at it in context, when you look at this, you say, well, wait a minute, I guess so. Yeah, we've come off quite a bit. Have we moved into a bearish mode? No, we'd have to break that 1262. Certainly this market looks bearish, and certainly you would be looking to sell rallies in this thing. But for right now, to say it's now we flipped all the way to bearish after going from bullish now to bearish, I'd have to go on and give it to put it for range. So I just wanted to go on and address that. Let's go on and move into the cable now. Well, this one continues to slide back in here, and this one is definitely bearish, and we've already slid back. You know, twice we tried to poke our heads above this 2734, and we carried back here, set new lows, came back thinking, okay, well, now we're looking like we really want to push higher. Boy, this cable is one fakery of a fakery. I've seen people say, you know, well, now look, it looks like now it's probably going to move higher, and I'll be doggone it. And look, we even closed above 2734, not this Friday, but the prior Friday before that. Looked like, okay, now we're going to make a move higher, at least to maybe challenge up here above 28. And boy, did we slide right back all over again. And Now I think yesterday we had our bias chart support just a little bit lower. We had it at 26.23. So we still haven't quite made it there. So we'll stick with this 26.23 here on the cable. And let's see here. Now, on a very ultra short-term basis, it's neutral, but you can't really call it neutral. It's already starting to slide back. So on a very, very short-term basis, when we're trying to work here and we're holding within this range, we could say it was, neutral sort of sense as we traded in here and moved back into this range. But now we've started to slide back below, and I have to say it's bearish at this point. So we want to update this. And let's go and take a move into the 2-hour chart. So we had 26.23 from yesterday. Oh, wow. Actually, we got down here, what about 26.17? And we're just holding just above there. So as I mentioned, we're going to go and retain that 26.23, which are our support level from yesterday. And as far as resistance, it's going to be right there, 26.78. So it appears our bias chart support is holding. And let's go and move into the Aussie. Well, we did go and ease back a bit, and the bias chart, we had 69.60. The low was, as I mentioned, 69.56. We're going to keep this here, the 69.60. That held. I'd like to say it was the same thing for the euro as it was for the Aussie and the cable, but that has held. And let's look as far as resistance. Just for a moment. Let's move into the 2-hour. It's going to be the 70.27 area here that we had on the daily, and we'll go back into this right here. That'll be the resistance, 70.27, that big old level, which we already had marked off. And with that, we'll move into the Kiwi. We finally saw the Kiwi finally back off a bit. Remember, we were looking for 67.09, and the market kept pushing ahead. And then, of course, when we opened up on the weekend, we rallied right into the 67.25, which is a level, and the 50%. The market did finally run out of gas. We've come off a bit here. We're looking for 67.09 on Wednesday and Thursday. And so support now. Let's go and take a look at a fib. just past the 23%. This 66.35 is reasonable, which is a 38%. Let's go in and take a look at on the 2-hour. There is some support in here, but I think potentially this market could still pare back because we've had such a phenomenal rally here. Look at that. And remember that 66.36 was 35 was in 38%, and that comes in right here with the 66.37. Let's go for a little bit of a stretch right there. Let's go with 66.31. 66.31. I don't think we're going to get there today, but I think that we will get down there. So if you're short, that'd be a good target area here for them. 66.35 is at 38% of this recent low and move back also. We're moving to the dollar CAD. This was actually our resistance. We came into this 31.36, but as I mentioned, this was really a weak sister. If you think about, look how the dollar has rallied, and look how this thing barely moved higher. That's one of the reasons I ended up bailing out a little bit early. Actually, I shouldn't even have hung on to the trade. When I came in, we'd already fallen quite a bit, and I actually came in at 31.27, and then I added again at 31.15, I believe it was. When we rallied up, I actually got out at the 31.15, and I kept the 31.27. I should have just gone and jumped out, especially since I short-term trader scalp. But I thought, boy, after this big fall, we'd see a nice rally back. And we did not, and we went and broke to newer lows and really pressed lower. As we did the analysis, I was looking for the market to come back. I said resistance is 31.36, followed by 31.92. But throughout the morning when the dollar, and talking about yesterday, was doing very, very well, the dollar CAD was really the weak sister. We finally, as the dollar just, kicked it into a higher gear, we finally got moving here in the dollar CAD. So that being said, resistance, we had 31.36, and that is held. Let's take a look on a 2-hour if we want to give it a little bit more room. If we do break higher, that resistance then would come in right there at 31.63. I'm not interested in it at all. Support right now is at 30. 30.97. And let's go into the dollar yen. Well, we're just kind of languishing here, and in our analysis, as I mentioned prior to the when the market opened, we were looking for a resistance coming in. You can see it right there. Bearish with an upside resistance at 858. We ran out of gas at 854, and the market continues to hold in that area here as far as resistance. So I'm not seeing any reason to change that. So 858 still remains the same here. And on the pairback, we're looking for 806. We're going to stay with 806. So no changes here on the dollar yen. Market just marking time as far as I'm concerned, in the sense that we had reached that level of 676 here in the dollar yen. We've been looking for that area here. We talked about that on the daily, just to recap. We finally made it to that 676. Actually, we made it to 678, so it was off by 2 pips. We've rallied back, and we're just kind of stuck in neutral for right now. Let the market do what it wants to do it for now. So no changes there. And with that, we'll move into the cash dollar index. Now, we've seen quite the bounce back. As I mentioned, this was predicated on the moves that we saw in the bunds. You'll see they're always going to find reasons to say, oh, well, now it's because the Fed's not going to price in. They're not pricing in 50 basis point. Look, they weren't even pricing in 50 basis point. Now, like I said, I myself have been saying, hey, there'll be a cut. Potentially, if the data were to get increasingly worse, it could be 50. The markets, we saw the story, acts like as if, man, 50 basis points were priced in all along until yesterday. That was not the case. As I told you, the reason that the dollar pushed higher, and even though we came out of G20, we were a bit firmer. We weren't going gangbusters. It's when the bunds started really breaking lower in yield that it really kicked in and knocked the euro lower, which, like I said, you saw the dollar going and come back, because as I mentioned before, the euro comprises 56.4% of the dollar. So if you're seeing a move here in the euro that was strong, considering where the bunds were going, that is certainly going to go on and drag the dollar up. So yes, the dollar moved higher, but was the dollar on fire after the G20? No. Was the dollar on fire at the beginning of the session? No. It was firmer. It wasn't until the bund started accelerating lower as far as yields that the dollar finally then started to take off. So it wasn't because now the Fed's not pricing a 50 basis point. If anything, the data came in on the weak side yesterday or barely okay, so that doesn't change anything. But that being said, we are where we're at, technically speaking. So we've rallied up to this trend line. We're just bumping up against here. Probably not pairing in, but easing, after this move. Market needs to digest it. Now, whether we're going to move much higher. We actually had our bias chart resistance yesterday at 96.70, which wasn't too bad when you consider the strength that we saw in the cash dollar index. So that wasn't too far off. Now, when we look here, where we stand here on the 2-hour chart, you can see here's this key area here coming across 96.81, and that will be our resistance. Yeah, there's a little bit higher, but you can see the importance of 96.81. And then we try and focus on these levels. Now, intraday, sometimes we'll have a level look, oh, okay, if we're going to push up higher, here's 96.94, but 96.81, we've already had a pretty good run, is going to be key for the cash dollar index here. If we were to get a close above that and really start to mount, that can open the door for us to move higher, but 96.81 is key for right now. Sometimes we'll hit these levels where they just come in and just the market makes a turn. We kind of saw that yesterday at 13.26, although the market overshot a little bit. We're seeing it today with 26.23 in the cable. We saw that. We saw it in the Aussie dollar. The low was 69.56. But generally what these levels are going to represent is where you're going to see selling come in. So sometimes I may get lucky, top tick or bottom tick the market. But for the most part, like I said, when you're seeing the 96 area, it's 96.81. Well, the market's already been above it. But where are we going to see people stepping in to probably ease off or take the other side? Well, it's just 96.81. So it's not meant to be the top tick or the bottom tick, although quite often We sometimes get lucky, and it'll come in very, very close. We saw the same thing also on Sunday here. Same thing here with the dollar yen with 858, and the analysis has been done. And we're looking, and the market topped out 854. But really, it just means where you're going to see people willing to step in and say, wow, I'm long the dollar yen, I'm getting out. Or, you know what, I'll gladly take the other side. Let me start to step in. Sometimes, like I said, we'll get close to bottom or top ticking it, but it just means that that's where you'll start to see actions start to come in. Henceforth, my explanation is why, because 96.81, some might say, well, how can it be there if we were just already above it? Because that's where this is a big key level, and we'll expect to see action to come in here. Let's go and look on here on the lower side here for support. That's going to come in right there at 96.45. You see that here? We'll go on and actually 44. And with that, we'll go and move into the cross rates. So let's move into the Kiwi yen. We had 72.26. We're actually below that right here. Really pressing it a bit here as the Kiwi finally starts to ease back a bit after quite the run. You can see here where they've come right to, back to the 72 cents right here. They're still further, but we've already come off quite a bit. Just as we look for this thing to eventually break back, which the 72 cents is a huge level here, but potentially, how much further can it go? Down here, we have the support down here coming into 71.76, actually 71.77. We'll probably see the market kind of try and hold its own here, but I think that potentially we can still drag further. So we want to go and put in that 71.77. And the Kiwi has really come in quite a bit. Now we had 72.83 as our bias chart resistance. We talked about that, I believe, right when we came into the let me see, the 72.75. Yeah, there's a 70 followed by 72.83. Well, I didn't know that the market was going to jump there, but that's where we went up to, and as we came out, it's at the beginning of the week as we're into the Sunday session. So resistance. Let's go and take a look at it on a 2-hour chart. I'm not going to give it that much room. Here it comes in at 72.40. I think it's going to have a tough time just trying to get past 72.31. So it's going to be 72.31. And let's take a look here at the euro yen. Probably seeing a pretty decent pullback. Let's go in and obviously with the woes with the euro. Let's take a look on the 2-hour chart. See where we stand. Trying to hold our own in this 122.20-ish area here. Let's see what we have here. Dip below this 22.58. Obviously, with the euro, which took on a world of hurt. Let's see what we have here on a fib. We're right up here against the 50% is where they found support. Let's go with this area here. You see there, that's a 50%, 22.15, and there's a level just below that. 22.11. We'll go with that, 22.11. Got the 50% there, and there you go, 22.11. Now on the upside, go 22.58. 22.58 on the upside. Things have changed here for the euro. And move into the euro Aussie. Made that track down here to the 38%. We're kind of holding. Let's take a look intraday. A lot of good volume coming in right there. And they just about made it, 61.41. Just about made it right there. Look at that. Right there, 61.41. Well, we had 61.42, so yeah, we'll keep it right there. And on the upside, $62.21 on the upside. And looking here at the Euro Kiwi. Boy, this thing's already had a pretty good little pullback. Yeah, right there at the 38%. Just made dips just below it. Yeah, some nice. That's a really good, very nice area right here coming across. Huh. 68, 68.91. A very nice area. So we're going to go with that 68.91. Although we already hit it and actually put like a short-term double bottom on that. But at least you know where the risk is on that. And looks pretty good from here. Resistance. On a short-term basis right there, 70.12, but we'll move it down a little bit lower because I think they'll get a reaction at that area. 70, call it 70.13. And we'll move into the ASEAN. We saw a nice little pullback here. I think we can still push lower here, that the market will test lower and before it gives up the ghost. So let's look for 75.24. On the upside, 76.01. It's still bearish overall. Let's take a look here. Yeah, overall, you have to still say this is bearish. Let's go move into the guppy. Needs to hold this area here on a short-term basis. 36.37. Just a little more, 36.32. With resistance right here, 37.09 until we can take it out. And lastly, sterling odd. We'll go down here to 80.37. 80.37. Well, we already had that. There you go. On the upside, we're going to go and keep this here and see what they can do. 81.37. Have 31. We'll call 37 here. And there's the bias chart for today. I'm going to get that posted into the room, and probably going to be relatively quiet as we go into, I would think, although we may see the dollar even up a bit here. But we're going into July the 4th. Things are going to start to wind down probably as we get past today. But thanks for joining us here. Also, by the way, I do want to go and advise you is that we do have a new start for the European crossover web, not European, the daily FX wrap up. It's going to be at 12:30 Eastern. I think that's also going to help because quite often by that time, a lot of the European traders have already, taken off. And sometimes we get FX pretty quiet. And as we get into the summer, it's probably going to remain very quiet. So the new start for the FX Daily Wrap-Up is 12:30 Eastern. So just to reiterate, that's 12:30 Eastern. Thank you, and we'll catch y'all later.